Hi, my name is Bill Singer, and I'm with Kenwood Management. And I wanted to talk with you about the differences between investing in a real estate investment trust or a REIT versus investing in a private equity real estate company. So let's start with the REIT, the real estate investment trust. So there are a number of benefits in investing in a REIT. These are publicly traded companies. They're very easy on any particular day that the stock market's open to buy or sell. It also doesn't necessarily require a substantial investment, meaning as an investor, you could buy one share, you could buy 100 shares, but the minimum investment is relatively small. It would be whatever the one share is currently trading at. When you invest in a real estate investment trust, you also benefit from the REIT's portfolio diversity. What I mean by that is they would frequently own property, could be coast to coast. So you are investing in 100, 150 properties around the country. Some are even international. So you gain as an investor some nice diversification from investing in a particular REIT. Let's talk now about a couple of the cons investing in a real estate investment trust. So I'm going to come back to one of the items that I just talked about. When you invest in a REIT, you're investing in all of those properties. You can't pick and choose which ones you want to invest in. You may have interest in saying, you know what, I would like to be invested in coastal properties, but I'm not really interested in something in the Midwest. Well, you can't pick and choose with that REIT, oh, I only want to invest in these properties that you own. When you buy their stock, you're investing in all of them. There's no ability to pick and choose. Let me talk about another big difference or another issue kind of with real estate investment trusts. So, as I mentioned, they are publicly traded companies. When you own real estate, as an investor, you benefit from two key pieces. One is the cash flow from that property, and the other is appreciation. You want both of those as a real estate investor. Well, as a publicly traded company, real estate investment trusts have challenges because Wall Street analysts who cover these properties don't always account for the appreciation part of the real estate. Let me explain what I mean by that. If you think about all the types of companies that are publicly traded, none of them have a product that appreciates over time. Think about that, okay? You could own Clorox Company as a stock, and their product, Clorox bleach. When you buy Clorox bleach, you're not expecting that it's going to appreciate over time. The value of that box of Clorox doesn't change over time. So Clorox as a company is only measured by what revenue, what cash flow it produces. There's no component related to appreciation. Compare that to a REIT, right? You own real estate and you're benefiting from the cash flow, which comes from rents, but there's also that appreciation part. And that's a key part of any real estate investment. When a REIT sells a property, and let's say it's a property that's appreciated significantly, well, as a real estate investor, you would like that, right? It has gained a lot of value and you're going to benefit from that. But Wall Street doesn't recognize that appreciation. Oftentimes, what they're more concerned about is how is that real estate investment trust going to make up for the cash flow that it just lost? Because Wall Street analysts and the way stocks are valued is based on cash flow. It's not based on a property's appreciation. So one of the big downsides of investing in a real estate investment trust is, as an investor, you don't always gain the value of the appreciated property. It's not always reflected in the stock price. So now I'm going to transition and let's talk about what it's like to invest in a private equity real estate company. And we'll talk again like the pros and cons of each. So some of the pros of investing in a private equity company is that first, as an investor, you get to choose whether you want to invest in a property or not. You're not investing across a wide variety of properties, typically. You are investing in a certain property or a very small group of properties. It gives you, as an investor, much more choice, much more ability to say yes or no. I want to invest in this market, or I want to invest in this property type, but you get that control, and that's one of the nice pros of a private equity real estate investment. Flipping now to what I talked about earlier, where the benefits of real estate investment coming from two components, cash flow and appreciation. As an investor in a private equity real estate company, both of those components factor in to your overall return. You get the full benefits of both. Third, another key benefit of private equity real estate investments comes from some tax advantages. When you invest in that type of property, as an investor, you may, not always, but you may benefit from tax advantages related to depreciation. You don't get that with the real estate investment trust at all, but with a private equity real estate investment, you do. Let me now move to a few of the cons related to a private equity real estate investment. First, the minimum investment is going to be generally substantially higher than it might be compared to a REIT. It could be $25,000 as a minimum, or $50,000, or $100,000. So compared to buying a single share of a REIT stock, it's definitely higher. It is also it is not as simple to sell your shares or your percentage ownership in a private equity real estate company compared to a REIT. As I said earlier, you could decide in a moment that you want to sell your REIT stock, but it would take longer to do that with a private equity real estate investment. So those are some of the key differences between the two. We get asked this question quite frequently from some of our investors. I hope you found it helpful. And if you'd like more information, please go to our website at www.kenwoodmgt.com. And thanks for watching.